I'm going to start with someone I'm very honored to have on stage, Nichole Mustard, the Chief Revenue Officer and co-founder of Credit Karma. Um, she helped found Credit Karma in 2007, just at the beginning of the last financial crisis. And we'll get more into what Credit Karma does, but she's basically, I think, done everything for the company, and she spent a lot of the last time doing international expansion. So we're going to have a wide-ranging conversation where I hope to get lots of questions from the audience. So I'd love Nichole to come join me on stage right now. Hey, Nichole, how are you?
I'm doing great. How are you?
Great. Better that you're now on stage with me. Um, you know, I didn't want to give too much of an introduction because I think you have a great story and there's a lot to talk about. So maybe let's start off with, what you were doing before Credit Karma, and then how did you find this opportunity?
Yeah, it's a great question. And thanks so much for having us. We're a big fan of Tech Toronto and always like to participate in the community. Before Credit Karma, I was employee number at another startup, which was originally based out of Boston called Compete.com. And pretty simple, Compete used ISP and ASP data to project activities happening digitally. So whether that was way back in the early 2000s, online dating or Amazon cart value or new credit cards being applied for, we had different verticals for that. And as employee number 7, I built out the financial services practice, all of the products in the go-to-market. And we sold that after about 4.5 years to TNS Wonderman, TNS Media. So it was a pretty good journey for me, and it was a great way for me to get very involved in the digital environment, in the consumer environment, and in the data environment, all of which led to me starting Credit Karma.
And so, what was inspiration behind Credit Karma? How did you and your co-founders come together?
Yeah, it's not your Stanford back of a garage type story. Ken, the CEO, and I knew each other from my days at Compete. So he had been a client of mine for about 3 or 4 years across both UPromise and then at eLoan. So, together we had grown quite a passion around consumers and data and digital. And I think there's a couple things that always build great companies. I think one of them is working with people you admire and you have a shared passion around. And Ken was very much that. Ryan, our CTO, who I adore as well, having worked with him for over 13 years now, was someone that was a friend of ours, who was at the time at Vanderbilt with his wife. And Ken was in San Francisco and I was down in LA. And the three of us came together around the passion of seeing that there was this move of more and more consumers adopting the internet and interacting with it outside of the big bad AOL disk back in the day. And we realized that from a financial services perspective, there was a time when the population as a whole would be on the internet, and that things like credit scores, which are really a up funnel. If you want to manage your credit, it's not that you want to have the best credit; it's that you want to get great products. And so, anytime you're thinking about managing the signal that you're thinking about a home, or you're thinking about accessing a new credit card, or you're thinking about how do I reduce rates on the products that I currently have to improve my day-to-day life. And so we saw that coming, and I can say that now. And back in those days, it was really like, hey, we wanted to be cool, we wanted to be like Google, we were going to show 3-digit number, and we were going to be amazing because Google back in the day had the bar, and we were like, yeah, we're going to do a 3-digit number. And that's what we literally started with, just the score. And we slowly built everything from there. But we knew that credit scores matter for consumers. And if we could help them with their credit scores, that over time we could help them with their financial product selections.
So I want to unpack a few of the things I just heard there.
Sure.
One is, it was 2006, 2007. Not everyone was on the internet. What were your biggest risks or concerns when you thought of starting this business?
Yeah, I think there was probably 2 things. One, back in the day, Sandhill, where a lot of the venture capital money comes from in the US, if you weren't a technology or a communications platform, you didn't really matter. So, definitely fundraising was a really hard thing for us. So just people understanding the problem set that we were trying to solve and why we believed it mattered and the vision of how we believed it could be big, like resonating with people was definitely a challenge. I think the other thing is that often the internet was seen from an early adoption perspective as people that were the least creditworthy. So, in the financial institutions, it was like, oh my gosh, if you're not getting direct mail and if you're not going into a branch, if you have to go to digital to apply for something, like you're so credit needy. And so there was just a lot of perspectives inside the financial institutions of like, oh, we shouldn't even be in digital. Like digital's, next to, payday shops or pawn shops or things like that. And just they thought that the risk that they would receive from the digital environment would never be as good as either in the retail branch or from their direct mail environments.
So interesting. Your potential customers were skeptical about your product, and financing was hard. So it sounds like an easy path forward. One other question I have to ask you is your third co-founder was a friend of a friend. Mm-hmm. Everyone says, how'd you get comfortable partnering with him?
If you know Ryan, he's like a very gentle and kind soul. And again, I adore him a ton. He's just smart. I think one of the things that worked about the three of us as co-founders is there was an enormous amount of trust and autonomy. I could always tell what I thought would be better, but in the end, I always knew he'd make better decisions. And, I ran the partnerships world, whether that was the data partnerships or our financial institutions. And he would always tell me what he thought, but he always trusted me. And we all ran in our own circles. And we came back and we added those Legos to the overall product that we were building, but there was never a exact map of where we were going, what we were doing. We just trusted that each other was smart. And I would say the other thing that just makes us a non-Stanford story is very much that I didn't meet Ryan personally for the first 4 years. So he was in, for a while, and then his wife's family had a bit of a sickness, and they had to go to St. Louis for a couple of years. And so I didn't meet him until we were 3 or 4 years into the business. And so we spent a lot of time on the phone, but video conferencing and things like that were not a big thing. And so I don't know, there's things with people and the way that they work and just, the commitment and timeline and communication that made everything in our relationships work together.
So it sounds like you were ready for the COVID era, not having to meet someone right away. I'm actually going to take that question from Randeep and change it a bit. So there's one there I see from the audience. And so I think what you said is part of your vision was having that simple score and, I guess help people improve their credit scores over time. So Randeep's asking what data attribution you use to help them recommendations and help them improve their credit score. I'm going to add a second part to that is at the beginning, how are you even able to get the credit scores without blowing all the money you had?
We had very little money. In the very beginning, we got very lucky in finding John Danaher from TransUnion. And John had built a company called TrueLink, which was bought by, or True Credit, which was bought by TransUnion. So he too was an entrepreneur, and he saw a bit of the vision of what we were trying to take to market and believed in it, and enabled us to actually get started in a way that made sense for a startup environment. But for us, a lot of it was really around building a product that built a sustainable and re-engaging experience with our members. And so I think we realized very early on that we didn't want to have to acquire and reacquire consumers every time that they were in market for financial transactions. And the way to do that was to build something that was recurring. And so while we started with a score, that was a piece of information at the time that consumers had to pay somewhere between $19 and $29 for on a monthly basis. So free was a differentiator. And as we moved from the score, we started to expand that to include the report and then credit monitoring. And as those started to come in and that data was updated from the financial institutions every month, we had a reoccurring conversation to have with our members. And it was that reoccurring conversation that allowed us to have a very different situation than arbitrage businesses or businesses that are very search oriented, where they're constantly paying for the consumer and they're sort of monetizing in a in-session environment. So we were able to design our business and the model very differently than a lot of the other companies out there.
So was that part of your vision when you launched that you had to get the ongoing conversation, or is this something that you learned over time?
We didn't have money to spend on search, so we had to figure it out elsewhere. I mean, that's just the truth. We're all from middle class, upper lower class families, and we've all been scrappy people in our professional careers. And so when we realized that, we weren't getting valuations through the roof, and we were already taking low to no salaries, and we had to pay for data. It was very much like, well, we can't pay for PR, we can't pay for search, we can't pay for all these things, and so we actually had to find a different path forward.
Interesting. Also want to talk about the environment. I think you launched March 2007. I don't know when the financial crisis just started, but it started slightly after that. So how much headwinds, like did your like the credit scores actually drop? What difficulties did that environment create for you?
Yeah, we had over the first like 6 months after launch, we had put all of our partners on the platform, so we had over 200 offers. And as everything started to blow up within the course of weeks, went from hundreds of offers to three. And I remember the three were all Advanta offers, which Advanta ultimately blew up and went into bankruptcy. So, it was just another sign for us that everything we did had to build a great product. And I look back at those days, and I really enjoyed those days, because I think that it's in this type of an environment that some of the best startups are built, because they're built around great consumer value and solving real consumer pain points and problems, versus trying to achieve scale so fast, or trying to drive a certain amount of CAGR, or just growth, or a certain amount of revenue growth. Instead, it's really like, well, how does a consumer interact with me? What is a problem I'm trying to solve? And how do I build a product around that? And those kind of stepping stones, which I find to be just so much more sustainable in a business. And, I think it was really hard, but I also think that we were lucky to have been founded during that period of time.
So I'm just going to ask a question about today. So as if you were to start it all over again, do a new company, is this the ideal environment to be starting in right now?
It's definitely a great environment if you have other founders that are in it for the long haul. And Credit Karma, and just amongst us founders and leaders, like we talk all the time about the grind. There's a lot of people, entrepreneurs, that want the 2 year and sell. And you can sell for 8 million, you can sell for 10 million, you can get off the ship. But if you want to build a business that's going to affect consumers at scale, Credit Karma is now over 100 million globally. You just have to grind, and you have to do all the things that other companies don't want to do, and all the things that people say that's really hard, or like, oh my God, I can't believe you're still working on that. But those are the things that make your business resilient and sustainable, both in this environment as well as in a growth environment.
So I love this. So you launched in 2007. It's a difficult situation. You focus on product. It sounds like you had a bunch of offers that just evaporated. Talk about the highlights. How long did it take you to feel like you guys were secure and you had a company that's working? And what were the highlights and lowlights of that period?
So I hear we have a secure company, but I think as a founder, you're always a little nervous. I remember, I think it was 4 years in, we had enough money to buy our first T-shirt, and the first T-shirt was 1 million members and growing. But it took us 4+ years to reach that, and it took us 4+ years from a financial responsibility perspective to be willing to spend money on swag. So. I think, again, we start and we're consumer first, and the heart of everything is how many members we have. And we look at that very much as how many members are coming back to us. And that is really the recognition of how we built a great product that helps consumers over time.
And as you grow, so you're not 1 million users, you've got returning users. How has your product changed? In 2013, I think you went well beyond credit scores. How did you decide what to offer next? How did that change your business model? I think there was a question from David Fry about how's your revenue model changed? Is it all, so talk about how you go beyond your core to expansion.
Yeah, I think at some point, the segment that wants to interact with you on credit and from an innovation perspective, what you can do with credit, they're never tapped out, but the growth opportunities in other areas are just significantly more. And I would also say that because we spent so much time building trust with our members started asking us to help them beyond just their credit. So don't help me just know what my credit is and when it changes and how to make smart decisions, but help me put it to work. Help me find products that are great for me. Help me, if I want a new credit card, find one that has the best rewards for how I'll use it. I already have a mortgage. Do I have a great mortgage? Should I feel good about that? All of those questions started to be asked of us, and we really wanted to go back, whether it was, moving into things like identity monitoring, so helping you outside of your credit, whether it was Claim Dog. Hey, every time you move, sometimes checks get left behind and they sit with the different treasuries. Like, that's your money. We should help you get that. Or if it starts to move into savings or auto finance, we should help you in those areas as well. And I think it was a really natural expansion for us. And I think, as we think about things today, credit still matters for all of those products, but it's not necessarily the reason you come, but it's a part of how you make great decisions. And, that's where we're continuing to spend our time, is more around how do we help you make great money decisions instead of just great credit decisions.
Interesting. And has the basic financial model changed? Because I assume most of these companies are paying you lead gen or customer acquisition cost. So as you expanded, it seems like it's still helping get consumers, but you're making sure they're aligned. So has that changed over time?
No, that hasn't changed over time, because we think it's critical. I think that, if you allow marketers to market, they want 100 out of 100 people to come to their site and apply, and they want to just grab the ones they want. And that's really great for them. It's really consumers. And so the goal of the win-win-win model and being aligned to only when a consumer finds a product they love and a financial institution finds a consumer they want, it's only in those environments that Credit Karma wins and Credit Karma receives some type of payment for services. Because again, I think anytime you start to move those around, you actually get unintended consequences. Consumers start applying for things they want, or financial institutions end up declining people, and that's bad for their brand too. But it's always that tension point. But yes, we still remain committed to getting paid for payouts when consumers do transactions that are good for both sides.
So I love it. You build a great product where the value for your suppliers aligned with your consumer, and you've been scaling it ever since. That I wish I saw so many companies that had such a genius, simple financial model that they could grow. Execution's key, but it's nice when the model grows. I'm gonna actually pick a couple questions about your journey out from the audience.
Sure.
I saw, where was it a second ago, a question about, from Dave Borelli. He was asking about, you started off, fintech as a term was in its infancy. There's a lot of red tape in financial services. What type of so basically, how do you overcome, I guess, legal challenges, if there was any, and basically what type of advocacy did you have to do to basically get accepted by the industry?
Yeah, it's a great question. I think that I still today approach the relationships in the same ways, that you have to earn the right to ask for more. And so whether it was starting with, different credit card providers, we started through the commission junctions, the Rakutens, the Fintels of the world, and we didn't have relationships directly with them. But as our volume grew, then I felt like we earned the right to talk directly to the financial institution. And as we started to talk to the financial institution, they'd say, hey, we like the traffic, but we want more of this and less of that. And we said, hear you. And interesting, most often when they said we want more of this and less of that, the more of this was better for the consumer as well. And so I'm like, well, this is great. This is perfect. So let's do this, right? So we would go down the path. And again, as we grew, we could get into conversations that allowed us to have influence or participation. It's probably participation even more than influence of, hey, here's how consumers view things. So, many times I feel like in financial services, some decisions made inside the financial institutions are, well, this is what the bank's trying to do, and this is what the product does. And I think over the last 13 years, they've become much more consumer centric. I think that they're moving and sort of adjusting their model to be consumer first. But I think the lens that we've is unique and we've been from is we've always been the voice of the consumer. And so I thought we always brought a unique position to the table.
So Nichole, do you think the reason financial institutions are becoming more consumer centric is because of companies like you? Is it because it's changing guard? Because at least in Canada, between me and you, I don't necessarily, the banks have always been the most consumer focused. So why do you think they're changing and what's leading them to that?
Yeah, so between me, you, and 178 other people. So I think Credit Karma, when we're halfway through the first decade, you started to see people use mantras in their organizations like do well by doing good. And I think a fintech in general, not just Credit Karma, but fintech in general showed that you can do well by doing good. And it wasn't a model that people had cracked previously. And I think financial institutions always wanted to do good by doing well and do well by doing good, but there wasn't an obvious path. And I think that's just become much. I applaud them for continuing to adjust their models towards a consumer-first environment.
Cool. I see a couple of questions from Tafari and Randeep, which are very similar. So your core product and the way you get that flywheel going is with a credit score. And they're saying with Advance, basically data, historically that's based on historical data, but now you have all this alternative data, you have machine learning, you're obviously giving recommendations on how to improve it. So how is credit scores going to change? And is there going to be some other tool, data that becomes more valuable or, based on whatever?
Yeah, I mean, I on this one, we very much follow the financial institution. So there's, an appropriate regulatory environment and layer that make sure that there's equal participation in the financial markets. And so I think people always ask us, oh, there's this new alternative data. If you guys do it, the financial institutions will come along. And I would say, absolutely not. Where the financial institutions go from a data perspective and a risk splitting perspective is where we go. So we really follow them. And it's a great question. And I ask partners that question all the time. I do think one thing that people, especially in this environment, don't have as much visibility to and hasn't been solved is a question around employment and income. And so credit is one piece around what's your risk, but how much line assignment should I give you? How durable are you during a downturn? What are the risks around you as an individual? Is something people haven't spent a lot of time. And I do think that there's a coupling there. I think there's just not an aggregated source of data that's available to lenders today to use in a meaningful way. But I know that they'd love it. And most of them use it for verification of any type of financial product that they're approving or considering.
So there's changes, but you're going to be a follower, you're not going to take your own data and come out with your own credit score.
I don't think our own credit score doesn't matter.
Yeah.
A credit score, whatever credit score it is, you can use almost any credit score. A credit score is just simply a directional path of how is the health of your credit. The credit score that we use and every other, I shouldn't say every other, but many other financial third-party services use are not the scores used at decision. And in the US, as well as in Canada and in the UK, many times credit scores aren't even used. It's the data attributes that are used to create the proprietary models for each of these financial institutions. So again, the score is just a aggregation of the data under it, and it's a directionality of how your risk is trending over time.
Great. I see lots of interesting questions, but I want to jump to something I don't see addressed because most people don't know this. Credit Karma expand internationally. Tell us why you decided to do it, how you did it, and I think you've been basically heading up those international experiences. So I want to know a bit more about this. So, did you enter the UK before Canada? I think.
No, we entered Canada first.
Okay.
So we definitely made sure we stayed close and we got to know our local markets, and we felt confident in becoming more of a geographically distributed company. And so it was very much a safe to entry, and it was been and has been and is a success for us. So we're very pleased to be in Canada and continuing to scale. So we have well over 3 million members up there and are just continuing to grow and loving it. But what we learned is that there's a core playbook that matters across geographies. So we spent some time going around the globe and looking at a bunch of different geographies and identified the United Kingdom as a next opportunity. So in 2018, we announced a company called Nichole, which was owned by Call Credit in the UK. And after regulatory review, we took ownership of that in 2019. And so I actually moved to the UK in March of 2019 to lead that acquisition and that original build. It's been great. The core playbook is really hey, do they have a population where consumers are transacting digitally? Do they have a population that's scored? Does credit matter when there's risk decisions being made? There's many other components to our. What we find is that not only is it great for us extending our business and getting access to different markets, diversification, and sometimes counter-cyclical growth, but what it also does is it gives us early places to test. So a couple of things that we're doing in the UK right now is, in working through GDPR in the US, we know the California Privacy Act is there, and we know GDPR is coming. But being in the UK allows us as an organization to get used to it, to learn how to work inside it, and how to make sure that we're supporting both our regulatory requirements as well as our consumer requirements. UK is also much more native. And so, over 75% of consumers interact with services in a native environment. And from a credit card application perspective, over 75% of applications are done digitally, very different than Canada and quite different than the US as well. And so again, it gives us these different environments and these different petri dishes to learn from that we can then take those learnings and populate across the rest of our businesses.
So I'm glad to hear the UK is the experiment country instead of Canada. Usually when you hear stories like this, it's like Canada's where we experiment in. So that's a good change of pace. It's interesting. Why did you feel compelled to move to the UK? Like usually when I hear companies expand, it's unusual for one of the co-founders to, up and move to one of the new countries.
Yeah, and my commitment was to be there for a year. So I've come back this March. I still maintain different geographies, but I think that when you're 5,000 miles away and you're learning how to scale communications as a growing company, I think having a founder there to say, this is how we did it, this is not how we would do it, this is our cultural values. We went from 0 to 90 employees in less than 9 months. And so you have to make sure that culture gets set. And if you leave that to new people to the organization to set, you run a lot of risk. And so, I felt very compelled that setting the right culture, having a executive who had autonomy, ownership, and the ability to say yes, no, without waiting 24 hours to get back to the mothership and find out, it just enabled the pace of what we wanted to launch. And it also gave our executive team as well as our board the confidence in the investment that we were making to the UK.
Interesting. And then being on the ground, sounds like you were picking up skills, making sure the UK acquisition worked. What was the biggest surprising challenge?
The small stuff. I think, working in a scaled organization, you forget the day-to-day problems. The first, I spent a decent part of the week because we were at WeWork, and our head of security didn't want to give our email addresses to WeWork so that we all had independent badges. So I spent a whole week on that. And I'm like, I should not be spending a week on figuring out the WeWork security challenges. But you realize these things, if you don't have someone who can call security and be like, hey, this problem, fix it, it could linger on for months. And what you sometimes find, especially with expansions further away, is that they don't return the IRR you were looking for on the investment because it ends up taking too slow, and it takes too slow because you don't have people who can cut through that tape. So that was one thing. I was not prepared for the grayness of winter. I did not know how the ceiling of the UK, London, came down so close, and I was still surprised that it was sunny at 10 p.m. in the summer, and then the sun was bright as could be at 4 a.m. as well. So, I very much took in the local environment. My wife and 4 kids joined me for the summer, and they were over for a couple of the holidays. So we had a great time, and the people are great. I love how forward thinking they are from a digital environment. They're savvy from a financial perspective. And it's an interesting market where you have to think about the outcomes instead of the rules. So from a regulatory environment, you're responsible for the outcomes of things instead of the regulatory environment telling you what you can and cannot do.
Yeah.
And so a lot of great puzzles to go solve.
Cool. I want to jump to one non-work related, and I want to we'll do a quick hit to some of the questions out there because there's lots of good questions. One thing I think I met, it was about 2 years ago I met you. We had a similar conversation. One thing that stuck out is that you're passionate about mentoring, especially women in entrepreneurship. So can you talk a bit about that side of what you do outside of work and why that's important?
Yeah, and so I believe in this, karma is very much, it's not just, my DNA inside karma, but it's karma's DNA inside of me. And I believe in giving back. There are so many companies that listen to me pitch when we were a startup. And, I always take 30-minute calls with nearly every company that reaches out or make sure they get connected to my organization. But at the same time, it's the same thing with other people that have helped mentor and advocate for me. So, it would have been easy for Ken to pick a lot of other people, but he was always looking for people that were different from him, that had a strong point of view. He loved the idea of a strong woman who understood data. And so as I've been looking out in the market, I'm always looking, mentorship is a good word, and I love mentorship, but I've been looking to really advocate for people. And so mentorship is kind of telling people these are the things how you should change. But I look inside my organization and across my VCs or other areas, and I vouch for people that I believe in, and I make sure I build those relationships and talk to them about philosophies or principles that are important to me and understand where they sit on those. But I think it's important as a woman to go out and say, I think this other woman is really a great opportunity for this role. And, if they're in, I'm in, and I'm here to help them continue to grow as they're in that. And I just think, I want to take that from a passive state of mentoring to an active state of advocating. And so, I've got a woman that I advocate right now that just left USwitch in the UK after being there for 13 years and, pretty much coming out of college, went straight there. And she's starting a brand new startup around the Carvana model in the UK. And that's fantastic. So I'm introducing her to a lot of VCs because I know she's data, I know she's consumer, I know, that she gets the scale and the passion of building, right? And so I'm there saying hey, this is someone I'd put money behind, and you guys should put money behind too, because I'm actually not putting money behind her, but I do think that they should. And it's that type of advocacy that I think really matters in this environment.
Cool. I love that attitude. It's advocacy versus mentorship. And I think advocacy has a much bigger impact. Could go deeper in that, but I want to get a few questions we have. I saw one there, which is probably in everyone's mind. How are consumers reacting to the current situation? And if let's do a quick hit, because I want to get.
Yeah, so I think in the first few weeks, it was definitely a health pandemic. And I think, the governments around the globe have done a great job with stimulus packages, relief packages, or support. But I think, the financial pandemic is still on the horizon, and hopefully we'll come back out of it in the swoosh faster than, we burn through the stimulus. But, for a while, consumers stopped engaging with almost everything. And I think they were, one, trying to figure out, are they healthy and what's the risk? Two, trying to figure out how to make sure Netflix was installed correctly. But as they've come back out of that, they're now more interested than ever in making sure that things are getting reported correctly. They're trying to make sure that every penny that they're spending, cash is king, right? So paying down debt early, people are paying minimum payments. They're not doing it because they're riskier. They're doing it because they don't know that they can get that cash back if they need it. And I think that's the right decision, right? And so, for us, we're here and we're trying to help people know what the relief environments are, whether it's in the UK, Canada, or in the US. We've got different content for consumers around unemployment, government packages, local packages that they should consider if they're in a stress situation. So we're trying to help. Consumers are ready to have the conversation, and we're trying to keep it up to date as this is very much a fluid environment.
So I love how Netflix became before everything else, and then once people realized, they'd start taking care of cash flow.
I think that's about right.
Yeah, I can ask my dad, who never watched Netflix, all of a sudden called me 10 times a week trying to figure out how to get it on his TV. Lots of fun. There's a lot of questions. I might send you some of the questions over to see if we can get answers for. I'll just ask one, which I saw from Mario, which was an interesting one. Was what were the commitments you and your co-founders made to each other when you started the company, if any?
Yeah, there were no commitments. I think we all took a significant cut in pay to start the company, and it's I don't know. There's sometimes just an unsaid trust between people, but there were no commitments. There was no prickling of blood to signatures on a line anywhere. Just three great people that trust each space to do what they are amazing at.
Nichole, thank you so much for your time. I think I could chat another hour, and I'd probably have questions for 3 hours coming from the audience. This was inspiring, and I really appreciate you taking time out of your busy day.
Thank you, Alex, and thanks to everyone up in Canada. Super excited to get back on a plane and get up there and visit. There's a lot of friends and colleagues up there across different companies, and just different VCs and people I know. So I hope everyone stays well and stays healthy, and would love to be back when you guys have some more time, and we'll have another chat.
Cool. Hopefully the border's been closed for at least another month, so hopefully sometime this summer it'll be open again.
Sounds good. Well, take care,
Thanks,
everyone.
Nichole.